So welcome everyone to today's Food Bevy webinar on being ready to scale and understanding the systems you need for retail expansion. So in looking at a lot of the brands who are joining us on here today, a lot of you are just starting out in retail, maybe selling online or in a couple hundred stores, and really want to know how to put your best foot forward for succeeding in launching into retail accounts. So we're going to be going through some of the logistics for that and some key areas that you need to know. Before we jump into the presentation, I also want to do a quick highlight of our Food Bevy Insider Box, which is a quarterly subscription that we launched this year. So if you want to learn about the newest, hottest CPG brands that are launching and getting the chance to taste those, definitely make sure you grab a box and sign up. We just launched our fall edition with some amazing products, including Mark's Snacks by Mark Samuel, which are just launching their new avocado oil kettle chips, rotten candies and gummies, and a ton more products. So with that, I will jump into our presentation here. All right, perfect. So today we are going to be going through being ready to scale, which is a fun webinar that we're doing in combination with Sin7 and Accountfully, two of our awesome partners who are always giving back to the community. So in terms of what we'll be going through today, doing a brief introduction, understanding what you need to know about working with retailers, how to prepare for retail success, and then we'll have some time at the end for a Q&A. So for those who don't know, I'm Jordan Buckner, founder of foodbevy.com, and every day I am working to find resources and opportunities to help CPG brands grow from the early startup days to scale. We'll also have today Josh Fisher, who's the VP of Product for Sin7, Brett Evanho with Accountfully, a finance and accounting firm for CPG brands. So with this, I'm going to turn it over to Josh to get us started with understanding why we're here today and the key challenges.
Cool. Thank you, Jordan. Before I get started, that subscription idea is brilliant. That's such a good idea. It's a great way to kind of introduce everybody to the brands in the community and everything. I love that idea.
Appreciate
Um,
that. Yeah, I say I'm always on LinkedIn and Instagram scrolling and see these great looking brands and never get a chance to actually try them because they're not in my local store.
yeah,
So part of it so that I can try it and help share that with other people as well.
that's so smart. Well, hi everyone. I'm Josh. I'm VP of Product at Sin7. I've been working in this space for it's hard for me to say it, but over 20 years now. Focused on e-commerce and really about 15 years ago, that's when I was introduced to the fact that e-commerce systems and back office systems had a really hard time talking to each other. And it kind of occurred to me that businesses were going to have a really hard time scaling if they didn't have a strong back office integrated with their new innovative, web-enabled sales tools. So today I want to talk to you about what it takes to actually scale. I've seen there's these different milestones that brands hit throughout their journey, and I talked to Jordan beforehand, and he kind of let me know just to get an understanding of the kinds of businesses that are going to be on the call today. And I imagine this is me imagining you guys. So I imagine that you guys are probably um, under 5 million today in annual revenue. You're growing towards that. You have a D2C brand. You've likely set up a online presence, probably using Shopify. Maybe you're dabbling in different online marketplaces, Amazon, Walmart, and go down the list. And there's a chance that you've built relationships with retailers. Maybe there's a handful of retailers that are selling your products now. It could be that you've really moved in that direction strongly, and you're in 50, different retail shops, probably in your region, maybe nationally. Um, but that's great. If you've done that, like you've gotten through so many hard milestones, just getting your brand off the ground, getting some recognition and adopting customers and getting those customers to return. It's a really hard thing to do. So congratulations. I would imagine that in the early stages of your journey, you were likely very focused on the customer experience. You're very focused on your branding, how you're presented, what your brand feels like to your to the consumers. You're focused on how you're items are presented online and how people are finding you through advertising and social and so on. And then that focus, that's what gets you to $1 million, maybe $2 million. And then as the brand starts to grow, that's you start feeling some of those complexities, right? The act of fulfillment, storing inventory, all the different operations. Maybe you're the type of person that really digs into the financials. It's a great if you don't do that today, like modeling out your financials and really being meticulous about those details. Some of the most successful entrepreneurs I've met, it's one thing that they all have in common is they really focus on the numbers. And you might be hitting that stage today, and you're trying to imagine like where does my brand go from here? Like I feel like I've hit this milestone, I've had success. I see a handful of paths before me, but how do I get to the next level? And I would, the thing we want to talk about today, it's like really it's three different acronyms. I think about EDI, 3PL, and B2B. So if you've had success reaching those consumers, especially through direct-to-consumer relationships, now it's time to start thinking about the different businesses, the many businesses that you could be selling your products to that could be essentially representing your brand on your behalf. So in doing that, so let's talk through those acronyms. But in doing that, while you're going through this process, one of the other things to think about is how to tighten up your operations and make your business machine run as effortlessly as possible, right? It's not ever going to be without effort, but you want to pay attention to the areas that are like stumbling blocks for you, or the areas every quarter that you get hung up on a certain area, whether it's replenishing your inventory or whatever it may be. You have to smooth out those areas and try to develop um, processes that can scale with you as you begin to scale. And ultimately, you want to start scaling faster from a business perspective than you are from a resource perspective. That's one of the goals that I would recommend. So let's start talking through some of those acronyms. If we jump to the next slide here, yeah. So let's talk about EDI. I'm sure everybody's heard this acronym. EDI, APIs. There are these acronyms that get tossed around all the time. To understand EDI, really, just go back like 30 years. Imagine you were running your business today without the internet, right? If you had a brand that you had developed and you wanted to sell those products inside of retail stores, you would have to go and build a relationship with the retailers. And then the retailers, they would have some methodology that they would essentially train you on how to accept orders from them and exactly how to fulfill those orders, the exact information that you need to give back to them. And there would be a very methodical way for you guys to communicate and do business with each other. And what EDI really is it's essentially a protocol that allows those exact methodologies to flow back and forth. Really, let's just use Target as an example. If you build a relationship with Target and you're receiving orders from them through EDI, really what they're doing is they're taking documents that they use internally and they're transmitting those documents to you through an EDI. You receive them essentially as a purchase order. You convert that to a sales order in your system. You fulfill the order. And then as you're going through the process of fulfilling the order, you're sending a document back to them to notify them that the inventory is coming. And maybe there's multiple locations that you're shipping it to and so on. EDI is a technology that makes that faster and easier. EDI, those protocols, the transmissions, you really want to rely on a vendor to help you establish that connection. So if you do build a relationship with one of these big box retailers, national brands, they're going to expect you to work with some kind of vendor like SPS Commerce, or there's a brand called Crystal that we have a partnership with that's really terrific. We're also partners with SPS. There's a handful of these. I think True Commerce is another example. But you're going to want to find a vendor like that that can integrate with whatever system you're using for inventory management and order management. That integration that they offer, it's going to allow the information to come from the retailer and then flow directly into your order management system. It's going to obviously allocate appropriate inventory. You fulfill the order, and during the process of sending that order off to the retailer, the EDI connection is going to take the information that the retailer expects and it's going to pull it back to the retailer. So it's like a communication channel that you have with the retailer. And that's somebody else explained it to me that way. The protocol concept is something I learned from somebody at Crystal, actually. It's a fantastic way to think about what EDI technology is. I would say too, this is an area, if you're relatively young in your business, and obviously every entrepreneur as they're starting out, they're trying to be as conscious of cost as possible. This is an area where EDI vendors are not they're not cheap, but this is not something you want to skimp on, because if you're in a situation where something goes wrong with the communications, you can actually be fined by the retailers. Or for instance, if the retailer submits a purchase order to you and you don't fulfill the quantities that that retailer is expecting, it can put you in a situation where you can be fined by the retailer. It can put you in a bad situation. So this is something you definitely want to investigate and put some energy into to make sure that you're finding the right partner to help you with this. I would
Josh, I'm
say,
kind of curious with EDI because it's something it took me, I think, a while to fully understand because
yeah,
I feel like it sounds very technical, but in some ways it's very simple. It's really just right, like how you receive orders from customers and then the information that you send back about that order.
yeah.
And so when is this usually an issue? Is it just when you're getting set up with a new retailer? Is it something that kind of takes a while? And or is it something that you just like set up easily and it's going? Because I think like some people it feels
Oh,
very simple and other people feel like it's very complicated and can delay retailer rollouts.
yeah, that's a fantastic question. So actually, when you go and start talking to retailers, um, one of the questions they're going to ask you is which EDI vendor are you using? And what I've heard is that the retailers use that essentially as a test. Because if you basically come back and you say, what is EDI? Then the retailer is going to know, okay, this person is not quite to the level that we need them to be. If this is a technology they're not even familiar with. So having your ducks in a row and being able to go and say, hey, I have a relationship with SPS, you know, maybe I'm not using EDI at this point, but I'm ready to integrate it with my back office or with Crystal or whoever you decide to use. That actually signals to the retailer that you're much more serious and mature as a business. Now, to your point about actually getting things set up, there is a process that you're going to go through. So you go to the retailer. Sometimes the retailers they will recommend specific EDI providers to you, um, but what they're going to want to do is they're going to run multiple tests. So once that retailer and your business have come to an agreement, you're going to establish a connection between your back office system and their EDI documentation essentially through your vendor. And they're going to send you a handful of purchase order tests. And then you're going to fulfill those tests as if you were actually sending inventory. And on both sides, you're confirming that the data is coming through properly. Just the process of getting your back office, if there's an out of the box solution, it could be, let's say, 3 to 4 weeks and you're up and running. If you're talking to a retailer that's not common, not everybody knows, there might be work that has to be done. It could take a little bit longer. It could be 3 months until the EDI connection is up and running. And then once that's up and running, just expect a few weeks of testing back and forth with the retailer. And as soon as you sign off on those tests and the retailer signs off on the tests, that's when they're going to start submitting orders to you. And then during that process, I would just recommend keeping your eye very close on those orders. You're going to want to manually check if the order's coming in, what inventory are they buying, what are the quantities, where are these things shipping to, and just make sure in a very analog fashion that everything that the retailer's asking for, you are fulfilling to their specs. But yeah, it's not easy. It's not like you meet a retailer and the next week you are getting purchase orders from them. It's going to take a little bit of time. So you want to be conscious of that when you're building these relationships.
Yeah, Josh, and I like that you talked about the fact that it's really a way for retailers to gauge how ready you are for telling their stores because someone once explained to me that retailers are doing two things. One is, finding opportunities that are going to help, but also it's risk mitigation.
That's right.
Whereas if you are planning to launch in June in the retailer and that's the planogram reset, but there's an error getting the EDI set up, your order's not going through, and like you said, it could be delayed 2 or 3 months,
Yeah.
then that's going to look really bad on the retailer because that's an empty shelf, space spot on the shelf that your products aren't going into, that they're losing sales from, and makes them look bad. And if they're doing a yearly review, you might miss a month, 2 month, 3 months of sales, and they're not going to credit that for you. They're going to see that as your fault. So that's why it's so important to get those systems working so you can get orders flowing and build that trust. Because their jobs as buyers and their team is they're trying to analyze what's working and selling, not making sure you're technically set up and your backends are working just to receive an order.
Yeah, that's 100% right. Like your product could be wonderful. Your product could be loved by every consumer that tries it. But if from a business perspective, you're not ready for those large transactions, yeah, that's something they're going to sniff out and they'll wait. They're going to basically shelf you until your business is actually ready for this. And yeah, being prepared and having all these ducks in a row, it can actually um, benefit you quite a bit down the road.
Awesome. Should we jump into 3PLs?
Yeah. Okay, so now we have an understanding of EDI, and if you're heading down this path where you're going to build relationships with retailers, then working with retailers is a lot different. If you've only been doing direct to consumer up to this point, you are very accustomed to orders coming in, and you're basically fulfilling a box of goods, right? If maybe you have some small retailers that you're working with and you're sending large boxes or a handful of boxes. But when you start working with larger big box retailers, now's when we start talking about pallets, right? They're actually their order quantities are going to be so much higher. And you as a business owner, that logistically just might not be something that you're ready for, right? Like not everybody has forklift in their budget for the next year. So 3PL is a really interesting concept. So these 3PL companies are essentially service-based businesses which will hold your inventory on your behalf and they will fulfill the orders on your behalf. And I've seen D2C brands work with 3PLs in many different ways. Sometimes a D2C brand, they'll produce their goods for the first couple years of business, and then they recognize, I'm really good at the creative side of business. I'm really good at marketing, and I'm really good at representing my brand and building up these relationships. But the operations and the back office and the fulfillment, that's not my forte. So I'm actually just going to outsource all of that to a 3PL, and they're going to hold all my inventory. Every time I get goods produced, I'm just going to ship it all to the 3PL. They're going to hold all my inventory. And every time I get an order, I'm going to forward it to them and they're going to fulfill that order on my behalf. And as long as it's a trustworthy 3PL and they keep my customers happy by getting products to them on time, that's totally fine. Other organizations, and that may grow into, I'm selling to consumers today, and tomorrow we're now shipping pallets off to Walmart or whatever it may be. I've also seen some businesses that they keep the consumer side of their business in-house. So all the direct to consumer, all the Shopify orders that are coming in, we're going to continue to fulfill those out of our warehouse. But then we're going to send 70% of our inventory to the 3PL, and they're going to store that inventory, and they're going to be responsible for those large three EDI orders as they come in. But the 3PL, like I said, it's a service-based business. It's going to house your inventory and it's going to fulfill your orders. And they have many different methodologies for charging you for that service. Sometimes it's just a flat fee and you agree to a tier of service. Basically, you get this much shelf space within their warehouse and they're shipping up to this many orders per month. Others are more sophisticated where they have an incremental charge on each individual order that comes in. And maybe you have big, heavy products, and those big, heavy products use more labor, so that's going to cost you a little bit extra. If you have smaller products, that's going to be a little bit cheaper. Some of them have really fine-tuned the methodology for charging you. There's 3PLs everywhere. The things I would look for, you have to have a 3PL. Every one of these 3PLs is using a WMS system, a warehouse management system. And it's important that when you're working with them, you make sure that they have a modern WMS. Because imagine you're going to have orders coming in from all these different places. They're going to land in your back office system where you're managing all your inventory and finances and everything. Those orders are going to have to forward on to the 3PL. They're going to fulfill the orders, and then they're going to send back shipping notifications to you, and everything is happening automatically. So if this 3PL is using, let's say, a homemade WMS system, which is actually very common, it might not have an API. It might not hook into your systems the way that you need it to. Maybe they do have an API, but there's only 10 people in the world that know how to work with it. These are the kinds of questions you want to ask. A lot of small businesses that are dipping their toe in this for the first time, they go in with a lot of great questions around what the relationship's going to be like, what the partnership, what the responsibilities are of the 3PL, how much is everything going to cost. But I would say drill a little bit deeper and understand how are they actually getting your work done and what technology are they using to get it done. Because that can also tell you how organized are they? Are they using modern tools? Are they ready to scale? Like, what happens if this 3PL takes off and now they have 10 times as many customers as they did this time last year? Maybe they're not ready to scale at that level, and your customers are going to have an impact. That's definitely not a situation you want to be in. Um,
Josh, one thing as well I've heard as being an issue is a lot of companies will use a 3PL that works for their D2C and online fulfillment. And they might be familiar with Shopify, maybe even Amazon, but then when it comes to fulfilling product to Walmart or Target, sometimes, or Costco, right? Like Costco has very specific ways they need you to pack product going to them. Like those warehouses and 3PLs don't always translate because they have different experiences that,
uh,
different from e-commerce.
That's a great point. Yeah, that's a great question. Like, I would jot that down and make sure that whoever you are choosing to hire is ready to work with your customer type. That's another great question. I guess, like, think of the 3PL not as a vendor. Think of them as an extension of your team. And you want to build a relationship with them as if they were an extension of your team. I talked to somebody recently who joked about, before the holiday season, they start sending the 3PL like holiday gifts, like, gift baskets with candies. And, sometimes they'll send over burritos for lunch for everybody because they want everybody that works within that 3PL to know them and their brand. So every time they're shipping out a package, they're, kind of giving those end customers the best experience possible. So yeah, you definitely want to ask those kinds of questions. There was something else that it slipped my mind just when you were mentioning that point about the technology. But yeah, if it comes back to me, I'll bring it up again.
I
But
guess
be
one thing
prepared.
as well, maybe related to that, is how does the 3PL warehouse technology tie in with the EDI systems? 'Cause I know some allow you to, like, when the order is shipped out, that information actually gets sent to through the EDI back to the retailer so that they know it's coming.
Yeah. Okay. So that actually reminds me. Um, so here's the thing. At this point of your business, um, you may go into this conversation and the 3PL says, "Oh, you do everything through EDI, no problem. We can take your EDI account and relationship with whoever it is, big box retailer, and we can hook it right into our WMS system. And every time an order comes in, we will receive it, we'll fulfill it, and then we'll notify the big box retailer that it's coming." And on paper, that sounds wonderful, right? Like, they're taking all this off your hands. But here's one thing that I would give you to think about. As you continue to scale, as you get bigger, you absolutely need a back office solution that is your source of truth. You need one application that you can log into where you can see all the different aspects of your business. So yes, you can go that route where the 3PL will offer to hook into Shopify, Amazon, Etsy, whatever you're using to sell goods. They'll hook into it, they'll receive those orders, they'll fulfill them for you, and then they'll send you a report to basically let you know everything that they did. That's great. But actually, um, your end goal, in order for you to get to the $10 million milestone and the $20 million milestone, eventually you're going to have that central source of truth, which is one back office application, and everything is flowing into that point, and then you are sending that information off to your 3PL, or you're the one in control of the EDI connections, or you're the one that are accepting the orders in from Shopify and Amazon. Eventually, you want to get to that area because it all comes down to accounting. Whether you're accounting for inventory, or you're accounting for your own finances, or you're preparing to scale the business. Maybe you're going to open up a second warehouse. Maybe you're thinking about having multiple 3PL partners. Um, these are things that you eventually will grow into. Okay. And yeah, this, I don't, this is a shameless plug for Sen7, but this is exactly the world I live in. So at Sen7, we are a back office solution. We consider ourselves a light ERP. Like I spent a lot of years in a traditional ERP space, and the hard lesson for me to learn is that digital native D2C brands have a really hard time adjusting to traditional ERPs because they're so rigid. You know, I would say unless you have a full-blown accounting team with a CFO and everybody on the team is committed to accounting for every single unit of inventory and every cent of money that's passing from one place to the next. If you're ready for that, a traditional ERP like NetSuite or Acumatica or they might make sense for you. But I would say 90% of the digital native brands that I've met, they move so fast. They need flexibility. They need systems that are modern and can be flexed into what they need them to be. They need strong APIs that will hook into all these peripheral apps that are important to their business. And that's what we're doing at Sin7. A lot of people, they hear our name and they compare us to inventory management systems. It's 100% true. That's where our roots were, inventory management. But a solution like ours, you can use it to manage purchase orders, sales orders, customer relationship management, all of your inventory across multiple warehouses. We have customers that sell in many different countries, and that becomes the source of truth for the business. And once you have that source of truth, it's the one place you can go where you can get a pulse on what's going on in your organization. And then you can use that source of truth to connect it to all these different either partners or applications that are important to you.
No, I love that. I just remember with when I was running my brand T Squares, I started off building everything on spreadsheets and Google Sheets, like a lot of people, maybe Excel, and
Hmm.
everything was working pretty well with our product line. But then once we added a second product line, our system did not account for all the connections and the automations, and the entire like process broke down because there were all these bases that just we didn't account for. And so I always tell founders, right, like when you get to that point where your business is starting to grow, you definitely want a system that can scale with you so that you don't have these giant headaches, because we were importing orders via email into our system, and if we missed an email or got caught in our spam filter, or my kid accidentally deleted it on my phone, right? Like that's
Hmm.
a crucial order that we couldn't get back. So thanks
Yeah.
for sharing all this.
Yeah, of
Next,
course.
we want to jump into the financial side of preparing for retail success, because there's a lot of considerations in terms of the money that you need and the finances and the systems to be able to support it. So at this point, I want to invite up Brad with Accountfully. If you're listening to our podcast, Brett is a frequent guest and talks about finance, bookkeeping, accounting for CPG brands, and works specifically with tons of food and beverage CPG brands and retailers to understand the key metrics and processes that you need for your business. Hey, Brett.
Thanks, Jordan. Again, appreciate the invite. Josh, great job there. A lot of things just flowing through my head as you're chatting through that. The one I don't want to jump in, but uh, requirements for a 3PL, make sure they have inventory on hand, readily available via somehow way that you log in as their client, and that there's relative accuracy of those quantities, right? So they're housing your products at their warehouse. Make sure you can do it. I've seen horror stories with some clients in the past that they get reports they're wrong. They have to go to the 3PL warehouse and count the inventory themselves, and it's completely off. There's missed pallets being gone, right? So your biggest resource as an inventory-based company is inventory, right? Make sure it's taken care of, insured, that you have confirmation of what you have in hand, and all the things that Josh mentioned. Secondly, 100% agree that for the size of the folks out there and listening in, you do not need a full-scale accounting and finance team. When you do have that, then yes, talk about NetSuite or different things like that. You can scale as a company from zero to really big these days with the technology like Sin7, QuickBooks, and all the integrations and everything that Josh talked about kind of to date there as well. And um, really enjoyed that part of the combo. I learned a little bit more on EDI. That was one short spot for me. So, anyways, getting to kind of the finance and accounting side of things, right? From what Josh provided in terms of EDI and automation and leveraging a fractional team like your 3PL, right? An extension of your team. All of that information is only as good as your accounting, your cash, your processes, everything you have going on, right? That's the lifeblood of your company. The inventory is being sold, but you need to have understanding where you're at from a cash in hand, what you need to order, how much you need to order, how much can you afford, what are my margins, the whole nine yards, right? So building blocks for growth. I'm gonna kind of go through this, and then I'll talk about a couple things as we go forward here. But just the big aspect is understanding from an accounting finance standpoint, there are building blocks and certain infrastructure and blocks that you can build off of, right? It's only good as the basic, you know, aspect of having a good accounting and bookkeeping team, getting monthly financials in place, reviewing them. Then you can get more precise and enhance those items along the way. And I'll kind of walk through that very similar to what Josh is saying of kind of, step one, step two, have one 3PL, then maybe two, then three, or whatever it is, right? But you have to get that infrastructure in place before you can really scale um, uh, your business. Number two, monthly, we already talked about that. Financial reviews, KPIs, cash flow snapshots, logging all steps of your inventory process. A big thing that we do at Accountfully is when you come on board with us, and any accounting firm you all use out there should do this as an inventory-based company or client, walking through the inventory process, the supply chain, the procurement. Where are you buying? Who are you buying from? Where do you house inventory? What are all the 3PLs, Amazon, etc., right? What are the costs of all your products? Basically putting together a bill of materials and assembly, right? So essentially, the whole point of kind of getting all that data into one, we call it the inventory workbook, into one kind of Google Sheet with several tabs, is so then we understand everything related to inventory, COGS, supply chain, procurement, so then we can properly account for everything in your financials from a P&L, cost of goods sold perspective, from an inventory and the balance sheet. Inventory workbook is very manual in Google Sheets. It's really good for a lot of people who are 0 to 1 million or whatever. But guess what? It's very time efficient, cost efficient. It's not automated. It's not precise, right? Once you kind of get that and you get to that point, then that's when you're looking at like a Sin7. And we have a lot of clients in Sin7 course. Fantastic. Decision making becomes easier with data that ties to accounting and insights to inventory behavior, right? Leveraging, taking the accounting and bookkeeping function of your business from just a cost center and a drag to actually, like, how can you leverage that information to become adding value to your company moving forward with that channel specific reports. Amazon, Shopify, D2C, distribution, direct retail, events, pop-ups, whatever it is, right? Really being able to, instead of just company as a whole, understanding your P&Ls within that will go a long way to be able to allow you to scale your business and make the best decision. And then the whole goal here is moving from reactive to proactive. from the financial accounting standpoint, inventory standpoint as well, right? Like once you get this going, it's a very well-oiled machine that then you can again leverage your infrastructure, your technology, your processes and systems to help your business grow. All right, so laying the groundwork for growth and kind of the next step here, or the next phase, or the next slide has two more. So if we kind of go through this, how I view this as kind of steps in the building block again of for small businesses, right? Number one is financial systems mastery, right? Getting bookkeeping in place, QuickBooks Online, cleaning up your records to date. Again, I'll always say this when chatting with um, Jordan, accrual-based financials, right? Not cash basis. Getting accurate, reliable reports, leveraging all those systems, QuickBooks Online, GustoBill.com, Send 7 on the road, making sure that they sync are automated and properly, accounted for and how you understand what they're used. Consistent monthly bookkeeping and financial review meetings, right? The data that's in there is only as good as what you're going to look at and ask questions. And as a small business owner, a lot of you are very creative. Well, actually, let's look at the numbers, maybe talk to somebody else, but also learn. What does this mean? What does gross margin? What does, this specific metric mean, right? Like learn and grow your, learn that financial information to help you make better decisions moving forward. KPIs and targets, introducing them and assessing against them. So again, the building block, good bookkeeping, accounting systems, bookkeeping and outsourced accounting support, maybe, right? Step two, inventory process mastery, right? Mapping out and reviewing the full inventory and supply chain process. I don't know how many clients over time, and we've been around for 12, 13 years, that as we went through our onboarding process and created this inventory workbook, there's been a handful of brands that have come to us where after we look at all their POs and put together the bill of material, that the landed cost of their product is higher than the sale price, right? And we're doing that, and it's like, well, that's fine, but you've been in business for 2 years, and I don't, so let's get this in place. Again, this is your biggest resource outflow and way that you're going to grow your business, right? You should at some point know in real time how much inventory you have in hand in terms of raw material, WIP, finished goods at the various warehouses, what your landed costs are for your SKUs, right? Understanding that, like you should have a real good idea from a manual perspective, even before you implement a system like Sin 7. Prepare for implementation or optimize your IMS. A lot of questions is, when do I need to implement a system like this? Well, it varies, right? If you could be a $10 million company that's buying and selling finished goods, and maybe 10 of them and your sales channels aren't overly complex, where you can get away from even using a system ever, right? Or you can do reports and piece together. Whereas if you're a $750,000 annual revenue and growing in-house manufacturer, that's a different conversation, more complex. You need to account for labor costs, reordering the whole 9 yards with that. So there's different decisions that come along the way. If you implement it, once you implement it, if you do it right, you're going to love it. If you don't do it right, it's going to be a pain, right? So making sure you leverage people at Sin7 or partners, and making sure you have sufficient resources, i.e., people on staff, operations, accounting, whoever, who know the system and understand their responsibilities within the system. You need to be in there every day. Do not do it if you're going to jump in once a month, right? There's different things to understand. Again, it's a tool, like you need to leverage it and use it, and you'll get a lot of value out of it. Spot issues like slow moving SKUs, inefficient 3PLs, high cost of goods sold, and then the last thing, kind of refine COGS tracking and establish a margin analysis strategy. The whole thing here is understanding your inventory process and how it directly relates to accounting, finance, cash, right? The last thing on this slide is sales channel mastery. So after we get kind of that financial systems and inventory and COGS analysis in place, and we get some steady state going with our clients, we love to then segment their P&L by sales channel, right? So again, you have D2C Shopify, Amazon, distribution, the different big box retails. You can even do it by customer if you get to that level, right? Where you're able to look at P&Ls via the class function in QuickBooks for each sales channel: gross revenue, net revenue, gross margin after COGS, right? Contribution margin after fulfillment, the 3PL related costs, operating profit, maybe after brokers commissions, advertising and marketing, direct contract spend, etc. But that allows you there to analyze, like, am I actually making money on any of this or not, and making good decisions, right? Because again, if you're just going to buy inventory to resell at a low margins or even a loss, and what's the point of it? Maybe getting rid of the sales channel or two, and you focus on just two of them, and you're off of D2C for whatever reason, maybe that's the best decision for you. But until you segment it, it's really hard to understand it, because a lot of people, you're going to get those every 2 weeks from Amazon, the deposits, cash deposits. Well, you got to first of all gross it up, understand what your fees are, calculate the COGS, and put together that P&L in place to really see what the whole, aspect of that line is, and it's really hard unless you're doing it full scale within that, right? So after you kind of get that sales channel mastered and you get some consistency there, and then again, continue to refine your COGS, your margin strategy by sales channel, overhead allocation for each channel. Again, by overhead allocation, just overall the time and energy and resources of your team and where they're going to allocate their time, right? If you have a marketing team in-house that can support all four sales channels, but they're spending 80% of their time over here on the Shopify D2C, and that's getting so much lower return. But what if you can reallocate the resources to the higher margin business lines, right? So it's a consistent uh, practice of reviewing financials, reviewing metrics, and reviewing sales channel specific items.
One thing, Brett, I know we talked about before, which I find so interesting, is that for a lot of e-commerce brands, there's a focus on data and analytics within the platforms themselves, so that you can fairly easily see how much product that I sold in a different period, given period, how much I spent on advertising, what my product costs were, and get like a pretty close, clean view of your financials. But when brands go into retailers, especially working with distributors, you might sell product, to a distributor 1 month, and then 6 months later, you're getting chargebacks and fees related to that order that you did 6 months before. And so it becomes really difficult to track your performance based on client, based on like invoice, or, even based on sales channel. And so how easy or difficult is it with accounting systems to really track that performance within like a sales channel or within a certain retail partner?
Well, I mean, it's a great point, right? And the point of, and this goes back to what Josh was saying about having like a source of truth, right? You do need to have a source of truth somewhere to ensure that this one system or maybe these two systems again with our clients that use Sin 7 Core is a source of truth for all inventory related items, right? And then QuickBooks Online is a source of truth for all, bank credit card transactions, sales data, bills, etc., right? That whole nine yards. So when you're looking at a source of truth and trying to say, even with Shopify having all this data, that sounds great, but what if they didn't account for these several things, right? So number one, when you're doing accounting properly, you're reconciling everything and reviewing everything, so you're getting a completeness and accuracy aspect of of where you're at. So even if you're looking over here in Shopify, what if they forgot that one bill that you got charged from your marketing vendor that somehow doesn't show up over here? They're just looking at the advertising spend that's connected to it, right? I'm just giving an example of that aspect. Or maybe they have standard or static COGS and all of a sudden your prices changed, or you had to air freight something in, right? So you have a high PO cost where you need to that specific PO you sell or that container you brought in that you sell is going to be lower margins, right? So yes, you're getting that. On the retail side, it is harder, right? So like you need to have an accounting firm or somebody that understands how to account for free fills and trade spend and the whole nine yards with that, understanding how to account for accounts receivable, manage invoicing, AR. When you get into the amount of time and energy on our end related to on the accounting side, D2C Shopify Amazon, that's much less than if you have a ton of invoices to unify in KE because you're dealing with all that trade spend and managing AR and getting paid and allocating that, right? So that's a little bit harder there. But again, staying up on it, having a good accounting, just the building blocks of bookkeeping, financial reporting, adding in sales channel tracking, then as you have a knowledgeable accountant or firm that understands that specific number one, they need to understand inventory-based businesses from an accounting and COGS. Number two, if you're in the natural food space, you're working with the big distributors or big box stores, having somebody that understands that expertise there. But it's really hard to do if you don't have that background, is kind of what I'm saying. But again, I think having a understanding where your social truth is and where it comes from is the end all be all. And that's where we have some folks that come to us and talk to us and they're like, well, I'm just gonna run my business out of Shopify, I get it. And I'm like, that sounds fine, but like, can you just review the P&L with us here every couple months
Yeah.
so we like point out things that you don't understand the balance sheet, right? Like to kind of look separately into this because it all reconciles to cash, right? So moving into cash flow mastery, right? We talked about basic bookkeeping, accounting, and financial reporting, inventory and COGS, kind of supply chain mastery, right? From a financial and accounting standpoint, sales channel, now to cash flow, right? The whole point of business, cash is king, right? So as we move forward here is really aligning inventory, financial data, and cash, right? Like that's what you need to do to run your business, right? Get more precise forecasted financials, not just a general forecast that you can have for a year, but sales channel specific forecast, for example, right? And kind of continue to fine tune and get that in precise. And that should be easier as you understand your numbers month over month over month, understand seasonality month over month or quarter over quarter, right? Integrate lead times, reordering, into cash planning. That's again understanding safety stock, lead times, reorder quantities, the whole nine yards that Sin 7 can help with you. What that does is as you move to kind of bullet points 4 and 5, analyzing capital needs and funding triggers, but then also cash and purchasing decisions become a value center. What do I mean by that? Well, based upon how much you need to order, how much cash you have on hand, maybe how much access you to get to a line of credit or a loan or whatever, you could buy more product up front for maybe cheaper or a discount because you know you can turn it and and have a great 3PL you can work with right in that realm. Or maybe you have minimal cash and you don't have access. So I'm gonna have to buy 6 different POs in the next 6 months because I need to just manage the business that way, right? So which is fine because if you have to borrow money and it's a higher interest rate, if you're not getting that discount, let's say per se, it may be more expensive, but maybe you save on freight costs, right? So the whole point of it is when you have that information at your hands and you're proactive in that, and you could have good relationships with your vendors and your 3PL, and you understand kind of where your sales forecasts are going to, you can save a lot of time just on margins of your business. Not a lot of time, you can save a lot of points in the margins of your business because you understand all this data and you understand how intricate it all is. And then the last thing, just strategic clarity and long-term profitability, right? After you get all this stuff down, then you're continue to implementing, and if you're at this level, you probably already have an IMS like Sin 7, optimizing though, continue to using like the forecasting tools, maybe the AI tools, and kind of continue to leverage those information. Again, getting clear data to make better decisions on pricing, product mix, and growth. On pricing specifically, right? Hey, I have a ton of product. It's moving slow. You know what? I need a little bit of cash to buy the next product or the next season's product. Well, let's discount this 6% because I know my margins specifically uh, for that sales channel because I know where I'm at and I'm still going to make money on it and it's going to free up cash to buy the next run, right? Those are the decisions you need to start looking at for a small business. And that's where that operations, inventory, finance, accounting worlds collide, right? Seek out more retail partners, more customers. Not the inventory planning is dialed in. The worst thing you can do is a small brand is spread your wings too far from an inventory perspective, right? Have too much inventory on hand because you think you're going to sell too much, or just basically run out of inventory that you're selling because you're selling into 7 different spots. Do you start slower? Do you start in 1 or 2 channels or customers? Refine your operations, your inventory, then expand because then you know how to run your business. And then the last thing here is just kind of throwing in once you get long-term profitability, you start making money, then you can start analyzing for income taxes and tax planning because you're going to know taxes when you make money and are profitable. That cash flow needs to factor into all of this stuff. So, um, kind of summarizing all this, right? Basic bookkeeping and financial reporting, the building blocks, understanding your inventory, COGS, supply chain, accounting, finance impacts, sales channel reporting, cash flow mastery, and how it impacts your overall business, and then overall looking forward, more enhanced forecasting, clarity, etc.
Brad, thanks for going through all this. The one takeaway that I think is really strong between both conversations is there's a lot to keep track of and to manage as small businesses. A lot of the people listening that I work with are 1 to 5 person teams, right? And so that's where it really helps to leverage really strong partners who can help you navigate these things to identify what's really important, what do you need for kind of the day-to-day, week-to-week operation of your business, so that you can go from operations and doing the day-to-day to taking a higher level view of what's going on to be able to make business decisions, which is so important. So I think this is so crucial. And I think the other thing as well is when you're launching and growing into retail, know that there are a lot of opportunities, but also a lot of things that you need to be prepared for so that you can really be successful within this. And so, Josh, I'd like to bring it back to you as we are kind of wrapping up in terms of making sure we're getting everything right for preparing for those retail launches.
Yeah, I'll make it quick. I feel like Brad, you did such a great job of like outlining, really what it means to be thorough in your accounting for the business, all the different details. And Jordan, you're right. The bigger you get, the more complex it gets. But if you see that as a challenge and you really focus on understanding how your business machine works and which levers you can pull and how to fine tune its operations, um, ev- eventually you'll be able to conquer it, and you'll be able to actually control the scaling of the business um, yourself. So anyway, really, that's I think today's conversation was terrific. Hopefully, you guys felt it was the same way. These are the things I would think about. Look at the systems that you're using today. If you're using, Jordan brought up spreadsheets, Excel spreadsheets or Google Sheets, and that's where everybody starts, right? People, you can, everybody can think inside of like Google Sheets, and you can build these formulas, and you can connect one sheet to the next, and eventually you get your system. But if you're building it and you understand it, what happens when the next person joins the team and they have to take responsibility for it? It becomes kind of tough. So look at the systems you're using. Are the systems scalable? Focus on how your business is operating, and try to make things as smooth as possible. And when you're ready, think about the things that you can outsource to others, like 3PLs. Maybe your organization needs to scale, but it doesn't mean you have to buy another warehouse or you need to open a location on the other coast of the country. There are services out there that'll do it for you. And then when it comes to the EDI, like I said before, look for a strong vendor, and be critical of both the 3PL and the EDI and what they're capable of. But I would get started now with the EDI. Even if you don't think the big box retailers are coming until 2026, start the research now, build the relationships, kind of learn the vocabulary and become accustomed to it, because it's just going to make those retail conversations easier in the future. And then, yeah, the last thing I would leave with you is just, yeah, think about building out that source of truth that, is the place that houses all of your business data. You want it in one place, that you can access easily and is ready to scale with you.
Awesome. Perfect. Thanks for that, Josh, and wrapping up. We do have a couple minutes here for Q&A at the end. Before we jump into that as well, just want to, if anyone is looking for a um, inventory management and kind of back-end business system as a source of truth, Sin7 is offering 50% off for 3 months to everyone who's attending the webinar. And so you can go to the or sin7.com/foodbevy to get access to that. A couple questions came in to privately for the Q&A. And so I'll ask those first, but if anyone has any other questions, feel free to ask those directly into the chat or put a hand raise emoji, and I'll invite you up to ask our panelists. First question for Josh, so I'm going to stop sharing here, is how challenging is it to transition from like Excel sheets to inventory management system, and what are the risks to business continuity?
Um, Yeah, it's a good question. So it really depends on how much data you already have recorded about the business. So, if you're a relatively smaller business, let's say you have less than 500 SKUs that you're managing, and maybe you need to bring over customer information, maybe you don't. But essentially, if all that information is in Excel spreadsheets, then it can be exported to CSV files, and then it can be imported to just about any modern system today. The tricky part is just making sure that, you know the different labels of information, like, your products. You may think of a SKU and a product title and a product description, and actually a back office system might want to know like the exemption codes or the category of the product, or maybe there's extra information that it needs. But if you're just getting started with a back office, I wouldn't say that process is excessively complicated. For those that are in a back office already and you want to switch over to another one, then it's just an act of exporting from one system, getting it in the format that you need it in, and then pushing it into the new system, which is a little bit more complicated.
Okay, appreciate that. Monica, I see you have a question. Feel free to come on up if you want to turn on your video or just leave on audio, and you can ask that to our panelists.
All right. Hey, everybody. I'll leave on audio for now.
Cool.
Um, just doing a million things. So hi, I'm Monica Freeman Green. I'm a co-founder in Uncle Wasely's Beverage Company. We produce a all natural ginger beer that is currently in 233 Whole Foods, as well as um, about 200 and growing separate retail accounts in the Northeast. So we use Doors Naturals for our Northeast business, including Whole Foods and UNFI for the rest of our Whole Foods business along the East Coast. We have not signed up for an EDI yet, and we have not been asked to, nor have we really seen an issue with it so far. So I'm just curious, like, is there kind of like a point where you have to, it's like now you have to go with EDI. Most of our business is kind of split between on-premise, with, bars and restaurants, and we have a few distributors on that side, and then with retail, which we have Doors and UNFI as our major distributors. And then we're on Fair. We just started on Fair. So we don't do a lot of D2C. Like we are on Amazon, but we use glass bottles, so we don't do a lot on Amazon yet until we move to cans. But just curious if there's like a point where it's like, okay, now you definitely have to get EDI, because surprisingly it hasn't come up for us yet. And I just wanted
Yeah,
to know if that's normal.
definitely hear that. Josh, do you want to talk about that, or I can share some tips
Yeah,
afterwards?
so it sounds like you're essentially you guys are producing your own goods, and then this might not exactly be the relationship, but you're essentially selling those goods to the distributors, or you're
Yeah,
agreeing to the distributors how much inventory they're going to take. Is that right?
that's right. Yeah. So we don't do a lot of direct, like B2B or
Hmm.
D2C. We do
Just
mostly
through
through
distributors.
distributors. Yeah.
Yeah, so in that relationship, personally, I would actually think of the distributor as essentially your quote unquote customer.
Customer.
And
Yeah.
it just so happens that you know who they're selling to. Where this might change is if you guys decided to have a warehouse full of inventory or use a 3PL or whatever, if you went directly to a retailer, like maybe there's a like Wegmans, maybe you
Yeah.
go to Wegmans and Wegmans says, "Yes, we'd love to do business with you. We'll submit the orders to you directly instead of going through a distributor, and then they'll prompt you to have an EDI connection. It could be Wegmans, it could be any number of other grocers. But
Okay.
they'll be the ones that prompt you.
Yeah, I
As
agree. I think either the retailer or distributor will make you go through it basically. The other point is like if you start getting 10, 15, 20 POs a week and they're all spread out, and you
Yeah.
want to make sure that you're not missing any because it's easy for you to think like, oh, that was actually a duplicate when it kind of came in and slipped under the radar, and you're like, oh, we actually missed an order that was really important. Those are probably the two points.
Okay. All right.
Perfect,
Thank
but
you.
great question for
Mhm.
that. All right, we are at time for today's webinar, but definitely appreciate all those questions. Josh, Brett, thanks so much again for being on, and thanks so much for everyone for joining today. As I mentioned, we'll be sending out the recording tomorrow, so you can go back and review anything that you missed or share that out with any of your team members. Thanks so much again, everyone. Have a great week.
Thank you.
Everybody.
Thank you guys.